China is escalating trade tensions with new tariffs on US goods, while the Fed Reserve holds interest rates amid inflation concerns. Meanwhile, tech stocks rally on AI-driven growth, and the US jobs openings hits a 14-month low, raising questions about the labour market across the United States. Let's head to Florida now. We're joined by Brad Gastwirth from Unearthing Opportunities. Great to have you here. Let's talk about China hitting the US, or hitting back at the US with these new tariffs. How do you think the higher duties on energy and minerals will now impact trade between the two nations?
Yeah, I think this is their first response, but I don't think it's going to be their only response, Aaron. I think you're going to see China be more aggressive this time around. Last presidency with Trump, they were pretty quiet. They didn't really come after the U.S. that much. I think it's going to be different this time around, and I think this is just the beginning.
Seems like the beginning, but these are two old enemies that know each other quite well, Xi Jinping and Donald Trump, from the first time around. Obviously, the yuan dropping in valuation essentially compressed some of those first-term trade tariffs that were put on by Donald Trump, as in they didn't really feel them. 10% doesn't seem like a huge amount from Donald Trump, given the capabilities of what they could do. Do you think that Trump will fire back now at the Chinese with even stronger tariffs?
Yeah, I absolutely think he will, and I think it's not going to stay at 10%, and I think he might go aggressive on different industries. And again, I think this is not going to be positive for either country. I think if this continues to escalate, it's going to hurt corporate earnings on both sides. But I do not believe this is the end. I think this is just the beginning of worse tariffs across the board.
What impact do you think a trade war on tariffs could have? And given that Canada and Mexico, essentially they didn't have to give up much, right? It was 10,000 troops on the border. Canada says we were actually already planning on doing that. We'd signed a decree about a month ago to do that. Do you think that Trump is actually quite serious about doing this? I've heard some commentators today say, we don't know whether Donald Trump is playing 3D chess or whether he's watching the S&P index drop 2% and then he's playing Snap. What do you think?
I think he's paying very close attention to what's happening across the board. I think in terms of what the next steps, I think he's going to get aggressive. I think the tariffs, ultimately, it causes inflation. I think you're going to see inflation pressures continue here in the United States. I think this makes it a worse backdrop in terms for many different industries. And I think it's going to be tough from a corporate cycle as well. So I think earnings could get under pressure from many different industries. And I think, again, I see this time around, I see both countries getting more aggressive than it was last presidency.
All right, let's talk about the tech rally. What a week we've seen. Obviously, with DeepSeek, things plummeted, and then all of a sudden we're back again. The NASDAQ, the S&P 500 surging as well. Do you think AI-driven gains from, I guess, companies like NVIDIA can sustain momentum?
Yeah, we can't blink here, Aaron. It's we get this roller coaster ride, but no, AI is in its infancy. We're going to see corporate growth for some time, but you have a company like Google that just reported after the close, and then they had, they didn't have a beat as big as people expected. The stock's down almost 10% after market. I think ultimately AI is in its early innings. I think the DeepSeek is something we really have to pay attention. I thought our conversation last week really hit it on the head in terms of, will people need, will they need to buy those high-priced, high-margin NVIDIA chips, or can they buy their lower-priced chips that the company offers? And if you can, that's negative for the company. That's negative for NVIDIA. I think ultimately the platform plays like a Microsoft is probably the safest way right now from an investment perspective, investing into AI.
So why all of a sudden do you think investors are back on the NVIDIA bandwagon? We have seen in the past week about DeepSeek, Taiwan, even the Australian government banning DeepSeek on government devices as well. Is it a sign that really the Chinese AI companies, or perhaps the non-American AI companies, won't have as an easy path in terms of success as, I guess, the market first panicked about early last week, because regulation will swoop in very quickly on any of these Chinese companies trying to do things easier and cheaper? And does that give NVIDIA the leg up it needs?
Yeah, and it's a great question, Aaron. I think from like an NVIDIA perspective, the thing that we're watching and I'm paying very close attention to, and I think some of the big investors are as well. At DeepSeek, it wasn't necessarily just that competition. It's just how they built their system. So if you don't need the highest end chips from NVIDIA, and you don't need to spend, tens of billions of dollars to create this AI infrastructure, that's a huge negative for that company.
Is it
Now,
though?
initially,
I don't agree. I don't think it is, because it's a little bit like McDonald's, right? If every time I had to go and eat, it cost me $500 to go and have dinner, I might not eat as much. But if it costs me $5, I'm going to eat 3 times a day. Is this not the case of, if you can use NVIDIA chips, the cheaper ones, to get into AI, more companies will jump on the AI bandwagon, and isn't that a good thing?
Yeah, so I respectively disagree. So when you go in the semiconductor side and prices go lower and you go to more commodity type chips, you don't get anywhere near the valuation that NVIDIA has. So if all of a sudden you're competing on low priced chips and you have low margin, low priced, that stock could get absolutely walloped. Now, do I think that's going to happen? It remains to be seen. I still need to, we still need to do research on, is DeepSeek being accurate with what they're telling us? Are they really using these chips? Now, the questions that we have with the NVIDIA, for example, it's, if you don't need to spend, like, Google just announced after the bell, 75 billion in CapEx. They're going to spend 75 billion in AI related infrastructure. DeepSeek did it for tens of millions. So if now Google only needs to spend $10 million and they were going to pay NVIDIA or some of these other component suppliers, in the billions, this is a big negative if that's the case. So it's something we have to pay attention to. I do agree that ultimately when things are cheaper, you can have more being built. But when you have such a dramatic hit to a top line and then also on the margin side, that's not good for the company's valuation.
I guess I look at Apple, right? Think about Apple before Steve Jobs came back the second time, when they had the Apple II. We've all seen the movies, we've all read the books, right? It was a company that, as you say, computers were in their infancy at the time, and if you wanted to get into graphic design, you better be a millionaire, because these computers were really, really expensive. It wasn't until Apple started making products for the masses, the iPod, the iPhone, obviously, that all of a sudden everyone got involved, and look what it did to Apple's valuation once it became a product for everybody. Why do you see NVIDIA and chip making for AI products different to the Apple experience?
Well, so Apple is a product play, right? So I agree with that concept. But if I look at a component supplier, so you can look at memory. So pull up a Micron, a Western Digital and Storage, any of the semiconductor companies, and you see very big ebbs and flows throughout the cycles of semis. Now, again, I'm very bullish. Don't get me wrong. I'm very bullish on AI and the growth that we'll see. What I'm concerned about is the valuation that NVIDIA currently has if you go into more of a commodity type product to build out your infrastructure. Now, again, I'm not saying we will do that, but if that is the case, that valuation gets destroyed. And it's now, I still think there'll be a leader, but they can be a leader with a valuation that continues to go low.
Yeah, all right, well, we'll see. Let's talk about US job openings. The drop now, does the decline signal, do you think, a weakening labour market, and also will it delay the Fed rate cuts?
Yeah, I mean, the labor market I think it's a lot worse than what's projected and what's thought of outside of the United States. When you look at it here, it doesn't seem good at all. You hear all the large tech companies continue to cut jobs. You look at the number of job openings that were reported today that were much lower than people expected. I think the lowest in quite some time. I think it's a very tough environment. Now, the rich are getting richer and the poor are getting poorer. There's this huge bifurcation. But ultimately, I think this labor market it's going to trick the Fed a little bit, because now if the labor market's super weak, now you have inflation. What do you do from an interest rate perspective? They're in a little bit of a pickle. So I think at some point they might still need to cut rates given the economy here in the United States. I think there's some really bright spots, but I think for the masses, there's more of a decline.
Salesforce cutting 1,000 jobs, the shift to AI, obviously hiring that broader trend in tech. I'm really interested in as to why. I mean, you say that the picture outside of the US about what's happening in the US is probably different to what is actually occurring. And you are right. I mean, we see headlines every day that the US economy is on fire, the S&P is soaring, NASDAQ is soaring. Why is it not translating to jobs growth, do you think?
Yeah, I think jobs are getting squeezed across. I mean, what we had Meta, Alphabet, Salesforce, Adobe, and some others cut jobs across the board. Now, you just had another 1,000 from Salesforce that cut. I think the reason why it seems good from the outside is you have a lot of wealth creation. This is driven by the market. It's driven by cryptocurrencies for the younger generation and the stock market for older generation. But ultimately, from a jobs perspective, a lot of jobs are being displaced. And I think that's going to continue. We're just in the beginning of that with the AI transformation. This is going to have major impacts across industries. And we're starting to see that. And it started really last year.
Yeah, I was interviewing someone from Amazon the other day who was talking about the number of jobs for developers, program developers, software engineers, and was talking about how that will reduce over time because AI will take hold. Speaking of hold, what about the Fed with rates? When do you think the next cut will happen? You've kind of alluded to it in your previous answer, but do you think we'll see a sudden drastic change in Fed policy towards rates because of the jobless numbers?
So it's a really good questions, Aaron. Ultimately, I mean, I don't know. I don't think it's this next meeting, but I think probably the one after. I think there's going to be another little bit of a wait and see approach from the Fed to see what happens after they probably stay static this next meeting. That's my best guess. But ultimately, I do think you're going to see. I think you're going to need to see a cut. I think you're going to have more of these concerns, especially now. Let's say the tariffs go and they start impacting earnings. This is just, it's a concern. Now, again, I am incredibly bullish on AI and the growth of AI. What concerns me is if companies that have these, incredibly high valuations, if they now don't need to sell higher margin and higher growth, then that's a concern overall. But yeah, I mean, look, Aaron, I think these are all the most important things to talk about. I think that it's likely we see a cut in, the next two meetings. But if we don't, I mean, I think that's going to spook some people too.
All right, Brad, some great answers there. We'll talk to you again soon. Thank you.
Perfect. Thanks, Aaron.